Hey people, I welcome you back. This is the third video in the set of videos in which I'm solving previous year board examination questions from the chapter Accounting for Share Capital. So in this video, we have taken May 2023. That is the main board exam 2023 question paper, which was held in May 2023. Sorry, April 2023. We have the forfeiture and reissue question that we're solving now, same type of question that we solved in the first two videos. We have a question in which there are two subdivisions and they only require us to pass journal entries for the forfeiture and reissue of the questions. Now, in the previous video, I did not prepare the share forfeiture account, which was supposed to have been prepared. I will do that also in this video itself. So we have BCG Limited forfeited 75 shares of rupees 10 each, issued at a premium of 4 per share for non-payment of allotment money of rupees 8 per share, which includes premium, and the first and final call of rupees 4 per share was not made. The forfeited shares were reissued at rupees 15 per share, fully paid. Luckily, this question also we don't have any pro rata. It is a direct question, and we can straight away start solving it. In case there was pro rata, then we'll have to compute the calls in arrears. A certain amount would be set off by the application money. So we'll have to go ahead and do that working note before we start solving. But this is a direct question. There is no pro rata. It's a full allotment question, and therefore we don't have to do that working note for computing call scenarios. We can directly compute it while we are solving the problem. So in the books of BCG Limited, journal 1, and there is premium in this question, and it clearly says that the person who was not paid did not pay allotment money of rupees 8, which included the premium amount, and therefore premium also has not been paid as he has not paid allotment. Am I right? So the journal entry will be securities premium account debit equity share capital account debit to share forfeiture account to calls in arrears account. Shares forfeited. As I had already told you again before, I want you to write the proper narration. I'm just doing the shorter version of the narration as the main aim of the video is to explain the concept in the problem. So BCG Limited forfeited 75 shares of rupees 10 each, issued at a premium of 4 per share, right? So, and the premium amount has not been paid as it was collectible along with allotment. The shares were actually forfeited for non-payment of allotment money, which included premium. So the premium amount has not been paid. When the premium amount has not, we'll debit share forfeiting, we'll debit securities premium account with the amount not paid. The 75 shares have not been forfeited, and 4 rupees the premium per share. That will be 300, and the share capital account will be debited with a called up value of capital multiplied by the number of shares forfeited per share. Called up value of capital per share multiplied by the number of shares forfeited. Okay. So what is the called up value per share? The total called up value of the share, the total issue price of the share is 14. 10 rupees plus 4 rupees of premium. So out of that 14, first and final call money is 4 rupees. Therefore, the total called up value till now is 10 rupees. See, 14 rupees is the total called up value. Total issue price of the share. The shares have been issued, shares of 10 each have been issued at a premium of 4 per share. So the total issue price is 14. Out of that, the final call of 4 has not been called. So what is the called up value? It is 10. But this called up value of 10 includes the premium amount of rupees 4 also, because premium 4 rupees was called up along with allotment. So we have to reduce that 4 also to arrive at the called up value of share capital, which is 6 rupees. Understood or not, my dear children? So equity share capital will be 75 into 6 rupees per share, which is 450. Now, what was the shares forfeited for? It was forfeited for the non-payment of allotment money. And first and final call has not been called, which means what? allotment money has been called and not been paid. So that is the calls in arrears. 8 rupees per share is the calls in arrears. In your accounting for calls in arrears, if premium has not been paid, even that will be included. Understood? In calls in arrears. So that is 75 into 8, which is 600. And what will be a share forfeiture amount? It will be the balancing figure. So 300 plus 450 is 750. That minus 600 is 150 is the balancing figure. So that is the share forfeiture account. Understood or not, my dear children? Now these shares have also been reissued, right? So what have they been reissued for? The forfeited shares were reissued at 15 per share, fully paid up. So the shares are being reissued for rupees 15 as fully paid up, which means what? 10 rupee shares have been reissued for rupees 15. Understood or not? So there is no discount here. It is a case of profit. Understood or not, my dear children? So it is a case of reissue at premium. Whenever we reissue shares at premium, what is the journal entry for reissue? It is bank account debit to equity share capital to securities premium account. Understood, my dear children? Kindly, you people kindly write the full narration. I'm just writing a shorter version of it. The shares were reissued for 15. How many shares were reissued? 75 shares. So that is 1125. The paid up, it is considered as fully paid up. So 75 into 10, the face value of the share will be credited to share capital account as it is considered as fully paid up. Face value will be credited to share capital account. And 75 into 5, it has been reissued for rupees 15, right? 10 rupees share reissued for 15. So 5 rupees is the premium portion. That 5 rupees will be credited to securities premium account, 375. Now, is this a case of partial reissue? No. All the 75 shares have been reissued. Am I right or not? So when all the shares have been reissued, there is no need for working note for computing the capital reserve at all. It is share forfeiture account debit to capital reserve account. And the shares were reissued at a premium. So there is no loss on reissue. So whatever profit on forfeiture we had is a profit on reissue that has to be transferred to capital reserve. Understood or not, my dear children? So that is the first part of the question. Now, let's go to the second part of the question. In the book, Geetika Limited forfeited 1,200 shares of rupees 50 each issued at par for non-payment of final call of 10 rupees per share. See, in this question, they say that it is non-payment of final call, which means what? Final call has been made, but the person has not been paid. So shares have been fully paid up. Understood or not? Fully called up, fully called up, fully called up, fully called up. Understood or not, my dear children? Out of these shares, 900 shares were reissued at 45 per share, fully paid up. Understood or not, my dear children? So that is a partial reissue. So the shares have been fully paid up, fully called up, but 10 rupees has not been paid up. There is no premium involved, and it is a case of partial reissue. So let's pass the journal entry. The journal entry is very simple, my dear children. There is no premium. Oh, before that, we got to write in the books of and all that. So let's do that. In the books of Geetika Limited, Geetika Journal, there is no securities premium, and therefore that will not be there. Only share capital portion. So the journal entry will be share capital account debit to share forfeiture account debit to calls and arrears. Now, share capital will be debited with what? The called up value of capital multiplied by the number of shares forfeited. We have determined that the total entire amount has been called up because final call has not been paid, which means what? Final call has been made but not been paid. Am I right or not, my dear children? So if it is completely called up, it is 50 rupees called up. So that will be 50 into 1200. 50 into 1200, 60,000 is a total called up value. Calls and arrears is what, my dear children? Shares have been forfeited for non-payment of final call of 10 rupees per share, right? So the 10 rupees is the calls and arrears amount. That is what has not been paid. Understood or not? So that also will fill in easily. 1200 shares have been forfeited. 50 rupees is the, sorry, 10 rupees is the amount that has not been paid up. So that is your calls and arrears. So what will be your share forfeiture account? The amount paid will be 48,000, the balancing figure. Understood or not? Understood or not, my dear children? Now it doesn't end there. These shares are being reissued. These are reissued for what? 900 of these shares were reissued at 45 as fully paid up. 50 rupees shares have been reissued for 45 as fully paid up, which means what? 5 rupees we have given discount per share. Understood or not? There is a loss on reissue of 5 rupees per share. What is the journal entry whenever there is a loss on reissue? The journal entry is bank account debit. Share forfeiture account debit. To equity share capital account. Shares reissued. You write the proper narration. I'm not writing the proper narration. Okay. 900 shares were reissued as fully paid up. So that will be what? 900 into face value, which is 45,000. How much money was received? Only for Alright, so we're back. We're back, and yeah. So the shares were reissued for rupees 45,000. For rupees 40,500 as fully paid up. So the 4,500 is the loss on reissue. But this loss on reissue is what, my dear children? It is a loss on the partial reissue. So we cannot directly do the third journal entry without doing the working note. The third journal entry is what? Share forfeiture account debit to capital reserve account with a profit on reissue. Whenever there is a partial reissue like the one in this question, what do you mean by partial reissue? We forfeited 1200 shares, but we are reissuing only 900 shares. So that is a partial reissue. Whenever there is a partial reissue, what do? We do the working note for computation of profit on reissue. Am I right? So we'll do that working note for this question. Computation of profit on reissue. What is the profit on forfeiture per share? The total profit on forfeiture in this question is credited to the share forfeiture account when we forfeited the shares. That is 48,000. Am I right? The profit on forfeiture per share will be the amount credited to share forfeiture account while forfeiture, or the amount paid up, that is 48,000, divided by the total number of shares forfeited, 1,200. So 48,000 divided by 1,200, which is 40 rupees. Loss on reissue. What is loss on reissue? Loss on reissue is a discount given per share on reissue. We see in this question that the shares were reissued for 45 as rupees 50 paid up. Am I right or not? As fully paid up. Which means 5 rupees is a loss on reissue per share. So that will be 5. And so what is the profit on reissue? Profit on reissue is 35 rupees. So the total profit on reissue will be the number of shares reissued, which is 900 into 35. And that will be 900 into 35, 31,500. And that, my dear children, is the answer for this question. And in the previous question, I have left out the share forfeiture account in the previous video. I will do it separately in a separate video. Let me show you the answer for this question from the suggested sample papers. Suggested answers given by CBSE. Just give me 1 second. Let me put it for you here. The problem with the suggested answers is in the working note, they would not have told you how they arrived at the 31,500. That is this amount, the profit on the ratio. So you might find it difficult, but I hope the explanation that I've given in this video would have helped you understand that part. So this is the answer given by CBSE in the suggested answers. As you can see, for every entry there is 1 mark. So even if you don't do the last entry, you still get to score 4 out of 6 marks. But I want you to do the entire thing and be able to do it. You should be able to do it after having listened to this and watch this video. For more previous year board examination questions, please keep waiting, and I'll be uploading more problems from this chapter that have been asked in the board examination. And do share with your friends who are preparing for 12th standard also. We will take care, have fun, and bye.